Hello, chart watchers, and welcome to this Monday, February 4th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we're starting off a brand new week, and we're seeing a lot of what we've been seeing lately. The S&P 500, Dow, all moving higher today. We got the Dow up 16 points right now. The S&P 500 up about 7 2/3 to 2714. The NASDAQ up 65 points, easily the outperformer today. Russell 2000 also performing well, up another 9 points and holding above that 1500 level. 10-year Treasury yield is rebounding. I was worried about this last week. We were seeing the Treasury yield move one way while equities were moving the other. That generally doesn't happen for long. And it's a 10-year Treasury yield this time playing catch-up, which is good news for the equity bulls. Volatility index down below 16. Remember the last two bear markets, we had not had a VIX close below 16 during either of those bear markets. So for those in bear market camp, this is not good news if we close there today. Technology continuing to perform well. The stock or that group is up almost $1, about 1 1/3%. Communication services also strong. Really, most of the aggressive stocks doing well today. Also, consumer discretionary having a strong day. Healthcare on the other side of the spectrum, though. A couple of things going on with healthcare. We do have biotechs and pharmas both struggling today. But even with that, we are continuing to trade on the XLV above key moving averages. Within the biotechs, Alexion actually had a decent report, but you can see after gapping up, it has gone into negative territory. That's weighing on the biotechs. A couple of strong performers, the two strongest in the S&P 500, both earnings related. Clorox, you can see, up more than $10 today. Cisco up more than $3 or 5%, both doing well. Well, Erin, I don't know, it's almost like Groundhog Day, the movie. Keep coming back, and I keep thinking the market's going to roll over, but it doesn't. It just keeps going higher. It's been a pretty impressive rally.
Oh, absolutely. And we did, my dad and I did talk about that on Friday because obviously we've been in that bear camp. I still am in the bear camp, just overall in the very long term, but we're certainly seeing the kind of improvement you want to see in the certain sectors, you know, the more aggressive sectors. I know gold is pulling back right now, so pretty interesting setup. We'll have to see if we can continue on.
Yeah, and gold was struggling during the bull market, but during this rally, it actually has held up pretty well, and I think part of that is the dollar, which has kind of struggled a bit. But anyway, we got a lot to go over today, so I'm going to go ahead and let you get into it. We got our schedule and agenda, and then we'll talk about a lot of things today.
All right. Excellent. Upcoming schedule. Yes. Tomorrow, Tom's going to be doing a workshop. Dan Russo from Chaikin Analytics will be in with us on Wednesday, and Roman Bogomazov will be with us on Thursday. He is one of the Wyckofian experts we have here at Stock Charts. And then Friday, Mary Ellen McGonigal will be back for what's hot and what's not. So big week planned ahead. Today, let's just get it started. We're going to do Monday setups after our technical news and headlines, earnings spotlight. Bruce Frazier is in, I'm sorry. John Hopkins is in here for the earnings spotlight. 10 and 10 to 1. SailPoint Technologies will be our first symbol. And finally, I'll finish it up with a sentiment update. Be sure and take that poll that we have out there. That's what you think the market is going to finish this week, either up, down, or very unchanged. All right, Tom, let's get started. Technical news and headlines.
All right, let's go ahead and go over the economic reports. There was just one out today. It was at 10 a.m. We got the November factory orders, and they were well below expectations. You can see dropping 0.6%. The market was looking for a rise of 0.2%. So pretty big miss there. That this is a report that can be somewhat volatile, and it certainly was for November. Taking a look at the reaction in the bond market, as I mentioned at the top of the show, we're having a pretty strong day in the yields, meaning that money is rotating away from treasuries today and into the stock market. Anytime we get that yield moving up, that helps to fuel an advance in the stock market as money is able to rotate away from treasuries, proceeds from those sales. So anyway, it looks pretty good. Now, I had mentioned last week that when you get the 10-year treasury yield going in one direction, like we saw at the end of November, I think I talked about this last week, but for anybody that was new or is new, let me pull up the S&P 500. So look at the second half of November. See how the yield continues to move down? If we pull up the S&P 500, the S&P 500 at the end of November was moving higher. So when the yield's moving down, it's telling you money's rotating into treasuries, but money was also moving into equities as well, which is kind of unusual. But after that, you can see the S&P 500 played catch up to the downside. So the 10-year treasury yield never really budged, and it just kept going lower. And then finally, the equities moved down as well. So I wrote in my blog article on Friday, I thought that the bond market might be sending us a warning again, because you can see that the yield was moving back down. And when we go forward and take a look at the S&P 500, it was going higher to end January while the yield was moving down. So if it was to play out like it did in at the latter part of November, we would see the S&P 500 fall back. But that has not been the case. Instead, we're actually seeing the 10-year treasury yield reversing back to the upside. And that would be bullish for equities if it continues. I would be looking up around 280. I think a break on the TNX above 280 would be a very good signal for equities. Until we get there, just more of the same, just mixed signals, really. Okay, let's take a look at some of the earnings reports that were out. We had a few of them this morning. That'll really pick up again later this week. Cisco Corp, SYY, food company, you can see beat expectations. Alexion Pharma, one I was just talking about, pretty good bottom line number there. Clorox, strong numbers, affiliated managers as well. After the bell today, another big one, the last of the FANG stocks, Alphabet or Google, will be reporting, and another big name in the biotech space, Gilead Sciences, GILD, also reporting after the bell. So let's take a look at some of the companies that reported earnings and take a look at see how the reactions, because sometimes you get these reports and you think one thing, and then you look at the chart and it's completely different. But on Cisco, and again, this is the food company, not the networking company, but Cisco SYY, big move up. And that coincided with some pretty good news in terms of the earnings. We did get that nice bottom line number on Cisco, 75 versus 72. And you can see that the reaction very strong as well. Now, we did see some selling kick in on SYY at this double top where we failed back in November. And then right in late November into early December, started seeing selling from this level as well, 67, 67 and a quarter. Today's high 67.34. So I like what's going on here. I think this could be breaking that downtrend on some really nice volume. But overhead resistance, you can see that's where the sellers came in before. They're still there. If we pull back, get a gap support test, I think that would be an indication, or at least a better reward to risk entry into the stock. ALXN, Alexion. Let's take a look here. And Alexion been very strong coming off of that December low. The stock was down at 92.5 and ran all the way up to 127 heading into this report. Gapped up today to 129. I don't like this candle. Looks like a reversal. And if you look across here, 127.5 to 130 has been a real difficult area for ALXN. That's where sellers have been residing. They were there again today. We got a bearish engulfing candle. Of course, the candle is not complete until 4 p.m., but at least for now, that's an ominous-looking candle. Volume is going to be heavy today, so we do want to see how it closes. If we finish like this with a reversing candle, I would look for another test of the 20-day moving average, and you can see 2 or 3 tails down around 117, 117.5. That tells us that's where the buyers stepped in as well. So got some short-term price support around that level. The rising 20-day, I would expect to see buyers there as well. So let's see how we finish on ALXN. Clorox. They did they matched top line estimates, beat bottom line, then they reaffirmed guidance. I think that's really all the market wanted. And you can see that with that, we did move back up through the key moving averages. Really nice day today, up almost 7%. And on a consumer staple like Clorox, 7% moves, pretty big move. Notice also that its peer group is breaking out. Now, Clorox has not broken out. So without even looking at the relative chart, I know that it's a little weaker than its peers, and that's how that shows up here. But still, you've got a very strong group. And when you look at it relative to the S&P 500, the group, it was incredibly strong in the fourth quarter. Of course, it is a defensive area, and this is typical for defensive areas when the S&P 500 is selling off like it was in the fourth quarter. But the market is now rallying, and this is a group that is beginning to lead again. So that's a pretty good sign that we'll probably see some more gains from Clorox. I think we have a pretty good chance to go up here and test this 165 to 166 area. AMG, affiliated managers, Reaction just kind of so-so. Beat on that bottom line, 353 versus 351. Need to get a breakout above 110. This is a stock in an area that just has not been a very good area of the market. Here are your asset managers, and you can see it's just been under steady decline. And even when we look at the group relative to the S&P 500, very, very little bounce in January, and it started to roll back over again. So you're talking about, when you get into a stock like AMG, you're getting into an area of the market that is being shunned right now. So we don't have a great stock relative to the group. We don't have a great group, obviously. So all of these relative charts are all pointing in the wrong direction. We like to see them going up from left to right, and they're all going down from left to right. So you've got bad group, you got a bad stock within the group. They had a decent bottom line. Stock's gotten an okay reaction, but I think there's still a lot of work to do on this chart. I'd be careful with AMG. Breakout above 110 on a closing basis, I think, would start to repair some technical damage here, but this one's still got a long ways to go. There was a company out earlier today, ESI, that raised guidance, Element Solutions, and you can see the stock is right now, a lot of volume been coming into the stock in this latest rally, but overhead resistance clearly in about the $11.90 to $12 area, and the stock is trading at $11.95. So we need to get this breakout, but did want to point it out because of the news and because of the heavy volume that the company has been seeing. So it looks pretty good, but we do need to get that confirmed breakout. Going back to the homepage or the dashboard, I wanted to go in and just point out the sector summary because I mentioned earlier that the aggressive areas of the market, I mean, we're starting to make some pretty good noise to the upside, breaking out above moving averages. We've been holding those moving averages, and it's starting to be led again by many of these aggressive areas of the market, which I find to be very bullish. So even though technically, in my view, we're still in a cyclical bear market, we're not out of it until the S&P 500 rises 20% off that low, and we're not there yet. But things have been acting, the groups have been acting pretty bullish, and the configuration. I know that I still have some concerns. I was a little concerned about the bond market last week. Still a little concerned about the XLY, consumer discretionary, versus the XLP. It's beating it today, but it's been in a decline. It actually fell last week for the first time in a while. So there are some things that we've got to still need to rectify. But for the most part, I do see some pretty bullish action here. And again, just looking at the top of this leaderboard over the last or over today, you can see 4 of the 5 aggressive groups are in positions 1 through 4. And then when you look down toward the bottom, you see healthcare, which is defensive, energy and materials, which I don't really classify as aggressive or defensive. They can be driven by a lot of things, the dollar, geopolitical concerns, things like that. So I try not to look too closely at those. They kind of stand on their own. But I always like to see the market rallying with aggressive groups leading. And if we go back over the last month, I know the rally's been more than a month. You've got real estate, which has done extremely well. But here you've got industrials, you've got technology, communication services, financials, and consumer discretionary. Those are the 5 aggressive sectors, and they're all hanging out pretty close to the top here. So I think that's pretty good. You look at the bottom, what's been lagging during this rally, and for the most part, what you would want to see, consumer staples and utilities, both defensive groups, they have been lagging for the past month or so. So overall, I think the action here has been pretty good. We have to still respect the potential for another push to the downside. But I think as long as those rising 20-day moving averages hold, if you are on the long side and you're riding this, I think it's okay to continue riding until you see a breakdown. All right, Erin, you said it was a little light earlier on upgrades, downgrades. What do you have for this morning?
All right, it is a little light. We had not as many reported today, but we'll look at some of the interesting ones for you. The first one we're going to look at as far as our upgrades is ASML Holdings. You can see right now we've got, it's made a nice little breakout. It's, let's see, we were upgraded from a hold to a buy. And like I said, I got a nice little breakout there, and you can see the intermediate term trend model. The 20 has crossed above the 50-day EMA, which is good news as well. But this is what I'm really looking at mostly, is this area of overhead resistance and this little penetration to the upside. And notice also in the thumbnail, this trading today is occurring completely above the 200-day EMA, which I think looks pretty good too on this upgrade. So I agree. I think that was a good upgrade. All right, let's go to ConocoPhillips. Goldman upgraded it today from a neutral to a buy. One of the patterns I'm noticing on a lot of these charts coming out of the rally that we had is a lot of head and shoulders, reverse head and shoulders coming in off of these larger declines. And I think this one's pretty much right on in that normally you'd see that move up there a little bit on that right shoulder, but we got a lot of volume that came in on this left shoulder and the head. We're now getting that breakout. I would say that it's probably an execution of this pattern, but if you can kind of tell that if we were to draw that neckline, and you can see it in blue, it is a declining neckline to some degree. And that definitely executed if you went with this downsloping neckline. But I would have been, as I am now, on the conservative side and waited for a breakout above these two tops. We got that on Friday, and now we're continuing on today. So I think this might be a nice little upgrade too. If you did the height of the pattern, the measure move would take you pretty much up here toward those highs that we saw back in September and October. All right, next one up, Intuit was upgraded today by Morgan Stanley from an underweight to an equal weight. I thought this one looked pretty good in that we had a flag formation is what looks like occurred here. You can see in the thumbnail we had this rounded top, but when we hit the 20, we did get the bounce on price, and you can see the intermediate term trend model buy signal with the 20 going above the 50. PMO looks great. It's not overbought. We could get all the way up here to readings of 4, and we're not even at 2 yet. So I like this on the breakout. I am a little bit cautious about the more aggressive sectors, being technology being one. So I am watching a little bit more from the sidelines. It's no fun. Granted, when we watch the market moving up, but at the same time, I felt really good when the market was moving down there in December. So we'll wait this one out. But I like this breakout on in a sector that is on the more aggressive side. All right, let's move on to some downgrades here. Wedbush downgraded Regions Financial from an outperform to a neutral. You can see it's been in this little trading range right here. Maybe you could make a case that it's a flag formation. I mean, you can make the case. At this point, what I would really be paying attention to is the fact we did get above this resistance level, I suppose you could say, at about 15.25, just in the very short term. I see this trading range, though. I don't think there's that much upside potential here. We would need it to break out. And, the PMO is setting up nicely, but looking at OBV volume, looking at the scooter falling, not so certain that I would be making a play on this one. All right, Thor Industries, BMO Capital upgraded it today from an outperform to a market perform. And as far as the downgrade, boy, investors certainly weren't happy about it. But you can see we had in the thumbnail it looks like a symmetrical triangle that was here. And honestly, you would expect it to come out on the upside, a breakout, because it was already on a nice rally to the upside. So typically what you're going to see is when you get those symmetrical triangles, they are continuation patterns, but that didn't execute in that way. We had a PMO that was doing some good things here, but now we have the 20. Of course, with price trading now below the 50 and the 20, you can see it has brought that 20-day EMA into a top below the 50-day EMA. Certainly don't like to see that. And our last one, Triton International, was downgraded today from a buy to an underperform. So we didn't even move into the neutral section there. We moved straight from buy into underperform. Clearly, market not happy about this. You've got a drop of over 8%. It did manage to get down here to what I would look at as a support level in the intermediate term. It does match up with these lows back here in November. The gap right there that we had previously. I would be looking for a move I would suspect we're going to get that breakdown after a day like this. But if we were to close up near the top of trading and, get really close to that overhead resistance, I would have a little more hope for this one. But given the PMO sell signal here, I think the downgrade was warranted. All right, and that completes the upgrades and downgrades. We did have one more upgrade on Intercept Pharmaceuticals. Also got downgrades today on Billiton, BHP, KeyBank, OKTA, Rio Tinto, and SAP were all downgraded today as well. All right, let's move along into Monday setups. And I know you weren't here, Tom, last week, and you usually say you won't take Greg's pick, but
I'll take it this week. I'm going to take it this week.
That's what I figured. He did pretty well. Let me go ahead and I'm going to just pull up real quickly those charts so we can see what happened. All righty. So let me go into my Monday setups here. There it is. And I'm going to look at mine, which was CEF, and really had Friday and today not happened, I think it would have been a pretty darn good pick. Because we picked it, let's see, that was Friday, Thursday, Wednesday, Tuesday, Monday. So I got in, I think, well, what did we say? 1280, somewhere in there. So, we had a nice move for this one. But the problem was we had Friday and now today, which it isn't doing that great. But it is, I think it's just barely to the upside, up by about 6 cents. And then let's see, WDO dot. Oops, that's COWDO.TO. And that didn't go in right either. Alrighty, and it's right there. And yes, Greg did much better. I mean, we did end up with a lot of consolidation at the end of the week, but his didn't pull back quite as much as mine. So he did pretty good this week, I have to say.
It was a strong pick, definitely in the gold area. I know, that's something that Greg watches very closely, a lot of the gold stocks. And this is a smaller one and definitely it's in a nice uptrend. I mean, really nothing. It's more of a momentum play and continued moving higher. Like you said, did kind of hit an area of congestion there at the end of the week, but got to give Greg his props. He had a really good pick last week.
Yes, I wish I'd picked his gold pick instead of mine, but well, there you go. Well, as we always say, you're only as good as your latest pick, right?
That is true.
Yes. So these were the ones that I came up with today. I wasn't that thrilled with what came up in my scans, so I did just a little perusing through watch lists and that sort of thing and came up with a few on the upside. So I think these all look pretty good. This one I almost picked. It's AutoZone Nevada. And you can see we have that PMO buy signal that came in. Obviously, volume going the correct direction. Look at these OBV bottoms here rising off, earlier in January. And if we come up here to the bottoms, the same ones, we're looking at a slight rise, but mostly flat. And yet we had these bottoms on the OBV rising. So that was a positive divergence there. And now we are seeing the PMO making that buy signal. And look at this. If we go into annotate and get that trusty auto support line there. Look at this. Look at the nice breakout today from a trading range. I mean, this has been a pretty tight trading range. We even were in that range back here in November. Managed to pop up there in December, but came back down into it. But now we're getting the breakout from there. And I like getting a PMO buy signal above the 0 line. So this one was a strong contender today. Turtle Beach Company, I know we get a lot of requests for this one. And I'm going to move this into a different chart because this is all stretched out. And I want to really give you a chance to see what I'm looking at here. And I know this is a little bit awkward, though. But I'm going to use just this part of the chart more than anything. So let me get in here and annotate for you. And it's a similar situation here. look at these PMO bottoms that we had back here. Make that a little thicker in a blue. So you can see, there we go. We had PMO rising bottoms. And what happened over here, we had declining bottoms. That was a sign that something good was getting ready to happen here. We did start to see a rally come off of this, but we never really were able to get back and challenge that $18 level. Well, we did in January, and now we have a positive, let's see, a bullish confirmation going right now. And we had that PMO whipsaw back up into a buy signal. So I honestly like this one, Turtle Beach, I'm sorry. And I thought that one looked all right, mainly because of the PMO configuration. MSG Networks was another one. And this one we had a rounded bottom coming in off of that V bottom. If we flipped this, we'd have called it an Adam and Eve double top. So now I suppose you could call it an Adam and Eve double bottom. But it looks like we're setting up a double bottom. PMO is turned up. We got a short-term breakout. You can see above the tops we had earlier in, let's see, in mid-January. Got that breakout. PMO is going the right direction. And NVIDIA is on my list today. Really nice bottom above the signal line. Now, I always caution that, you know, we have the 50-day well below the 200-day, but this looks like a pretty, I think this is a good setup for a reverse head and shoulders, where that's your left shoulder, there's your head, and that's the right shoulder. And you can see the volume picking up on both of these shoulders. And now the neckline would put us right about at that gap resistance level at about 170. I think you could see the move to 170. Not so sure we'll get the breakout just based on the configuration of those EMAs, but I thought that one looked good. But my pick is Extran Corp. And this is an oil equipment services and energy. Look at the really nice positive divergence here. I mean, price did not react that much, but we have momentum building within this, within Extran Corporation. I would have liked to seen the OBV do a little bit more, maybe get its bottoms on the rise. But really, I like seeing that PMO positive divergence. So I'm going with EXTN. I have it at 1772, but it looks like we're at 1776 right now. So I will take that. My target is right about here at $20.50. The stop I would set, below this breakdown level, about 1650. You could probably go down even further if you wanted to about 1625. But yeah, I think that would be a nice move to the upside if we could get that.
All right, sounds good. So you got EXTN. I do want to just add one thing about NVIDIA. You were talking about NVIDIA. I'll show you on my screen here. This is a seasonality of NVIDIA. And if you go across, it's the last 20 years. And so if you go across here and take a look at the average returns, February through May, and add those up, 23.5%.
Ooh.
Has averaged gaining from February through May over the last 20 years. So you've got some seasonality that's backing you up there on NVIDIA as well. I know it's been a rough ride for NVIDIA for a while now, but got a lot of folks that have been selling. So maybe everybody's sold out, and NVIDIA might be ready for a little bit of a relief rally to kind of play some catch up with the overall market.
Yeah, looks that way.
Yeah, so it definitely has been strengthening. So that's a good thing. All right, let's go into. I'm going to go ahead and go through my pick for this week, and for the first time in a few weeks, I'm going to go on the long side, which probably means we're about to top in the market. But I've just given up on the short side, at least for now. I mean, if we get a big reversal in the market or we lose the 20-day moving average, then it probably will be time to maybe think about shorting again in the very near term. But I do think, with the way the market is behaving, I do think that low from December has marked a major long-term low. I don't think we're going back down there. Loco is going to be my pick. This is one I talked about recently. Stock came out, had really good results, had gone straight up, was just overbought. I mean, you could look at the RSI. It went up over 80. It needed a pullback. I was looking for a 20-day test and went down a little bit below that. I probably would have bought it, except I wasn't buying individual stocks just yet, back middle of last week. But this is the first stock that I have bought first individual stock that I've bought in more than 2 months. And so I bought Loco today. I think the stock is going to hold its 50-day moving average and make a move to the upside. I could draw a trend line across here, and you see the stock's very close to its trend line support. It is in the restaurant space that has been, really strong over the past several months. And so I think we're going to get a rally here on Loco. And if not, I would watch maybe the 50-day moving average, keep a fairly tight stop there. If the market rolls over and Loco loses its 50-day, I'll get stopped out there. But I'm looking for it to resume its overall uptrend, and I think it's going to make another move up there for about the 18.25 area. So I'm going to go with Loco. Let me get updated just to make sure we got the right 16.17 is where it is right now. So let's go with that price. And then I've got some others that I will share as well. Some stocks I think that could be ripe for a rally. Square starting to make a move. It was a little lower when I picked this one earlier today. But I do think the move back down to the 20-day, I would be surprised if Square does not make another push back up for $77.5, $78. I think the downtrend is ended here, so I would look for this rising 20-day moving average to continue to provide support. In my blog article this morning, I went with HZNP, and it is doing okay today. It was down earlier today, but it has rallied back up more than 1%. The primary reason it's not my pick for this week is just because it's up against resistance. But I think if you look back, and I'll go back a year, you've got an uptrend followed by an ascending triangle. So that is a continuation pattern. Here's your uptrend. Here are your equal highs. Here are your rising lows. I think the stock breaks out. And if it breaks out, probably looking at about $28, $29 measurement on HZNP. The other thing I like about it is I think if we go into the relative chart, you'll see that the pharmas, I'm going to go down here toward the bottom. Remember I was talking about you want to see these charts going from left to right, heading higher. That's what we have here. Here's pharmas relative to the S&P. They were leading all the way up until mid-December, and then they came down when everything else was kind of rallying back. So they kind of took a back seat. But you can see prior to today, starting to rally again. I'd like to see that relative strength hold, that support from about a week and a half ago. That needs to hold. Otherwise, I'd be looking for this to resume its leadership back to the upside. Horizon has been outperforming the S&P 500, and it's on the verge of breaking out to a new relative high versus its peers. And again, the overall group just went above some reaction highs from earlier in January, so I think the group looks pretty good here. We can just get that breakout. That's what I'm looking for on HZNP. I think we will get it in time. Okay, let's take a look at the next one, which is VHC. VHC is pulled back. And this pullback after a huge move, look at the volume coming in on these moves to the upside. I think it's just pulling back into maybe a little bit of a flag. I'm waiting for this trend to break back to the upside or a test of the 20-day. You can see recent lows were 475 before the stock made one move up to 550. I think if it comes back down the 475 area, it's pretty good stock. But it has been moving very fast. So it's a smaller company. Just beware that it's more volatile. It's not for everyone. But I do think this one looks good, especially if it moves back down to about the 475 area. Within the restaurants, I did talk about Loco. How about Starbucks? I like Starbucks. We did fail at the overhead resistance pulling back, but I think what we have here is a move up, a cup. I think we're pulling back into a handle. I like the 20-day moving average if we get there for entry, and I expect a breakout, and the measurement on the breakout probably up to about the $76 level. And then the last one I have also in the restaurant space is Denny's, DENN. Nice move up, big push here to the upside, pretty decent volume. We've pulled back right around this 20-day moving average. That was all of these prior tops here. Even over here, 17.5 has been a problem. We finally got through on some decent volume, and now we're pulling back and testing it from up above. So this is a stock that was just at 19 about 3 weeks ago. Now it's back to 17.50. I think this pullback is viable. So let's go ahead and go over the summary of the stocks we just covered. And there you have it. So Erin is going with EXTN, 1776. I've got Loco. I got 1619. I think it was 1617, but we'll go with 1619. And we'll see what happens from
Alrighty.
here till next week. All right. All right. Let's move into earnings spotlight. It's been a couple weeks. And I know I got my good friend here, but first, this earnings spotlight brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. Mr. Hopkins, what'd you think of that Super Bowl last night?
Good morning. How you doing today?
I'm doing all right, but what do you think of Tom Brady's 6th ring?
Well, okay. This is stretching it, but we do have a little bit in common. Of course, I was born and raised and educated in Michigan, and Tom Brady went to the University of Michigan from 1995 to 1999.
Mm-hmm.
He was actually the first 2 years a backup to Brian Griese. And in 1997, that's when Michigan went to the Rose Bowl, and they were co-national champs. They couldn't get it out right. They were co-national champs with Nebraska. Then after that, Brady started playing, and then in the year 2000, he was drafted 199th overall in the 6th round.
So is that similar to you? Were you drafted this round?
Well, they overlooked me for some reason in the draft. But do you know who was who the number 1 and 2 players selected in that draft were? 2000.
Number 1 and number 2, 2000.
Yeah.
Was that like Ray Lewis?
Nope. And what's really interesting about it is both of them, it was the first time, went to Penn State.
Penn State. Now you're giving me clues. Why am I not coming
I'll give you some clues. One you should get. The other one I don't think you will. But if you think about the Redskins.
LeVar Arrington?
Yes, he was picked number 2.
And Samuels.
Courtney Brown.
Oh, Courtney Brown. That was a defensive lineman.
He was the defensive end.
I forgot about that guy.
Yeah. So anyways, they both played 7 years in the NFL.
No.
And, of course, Brady's been at it forever and no sign of slowing down. It's pretty amazing. The whole thing's pretty amazing. 6 rings. He and Belichick, the best ever. I think that's all been put to rest by, this last outing.
Yeah, I would like to argue that point, but it's hard. It's getting harder and harder with every Super Bowl they win. Almost
impossible at this point. But anyways, speaking of winning, kind of getting back to the market here. Boy, this is, this is like one of those markets where you start seeing signs of it maybe being overbought. You got a V bottom, the NASDAQ up 15% since that bottom December 26th. And just when you think maybe the steam is out, any dip seems to get bought up. And you went over some stocks this morning that reported and look pretty good as well. But
it looks like the market just doesn't want to take a pause. I mean, here you can see, the NASDAQ, since moving above the 20-day moving average back in the first week of January, and this was after Apple. Remember, Apple had warned, and there's the drop back down below 6,500. We have now gone since early January to now, so over the last 30 days, basically, from under 6,500 on the NASDAQ to now being over 7,300.
Yes.
And first of all, that's not completely unusual when you get into a steep sell-off like we had. You look back at some other cyclical bear markets, and this is, up until maybe about a week ago, I would say, very similar type of response back to the upside. But like you said, we're not really seeing any pullback. We have not yet even tested the 20-day moving average, and here we are breaking out to another new high today. And by the way, this week historically is not a great week for stocks. So we got historical headwinds, already very overbought, and now we see the market continuing to push higher. Pretty impressive.
Very impressive, and as we've learned, very difficult to short. You can try to short this market, but man, it's hard to short the market always. And when there's momentum going, trying to short stocks that even missed earnings and typically might run into resistance at key levels. I think even those stocks are being looked at on the long side. But I've got a couple stocks today, at earnings beats, of course, what we do. is we wait for companies to report earnings. We particularly like companies that have strong showing, gap up on solid volume that could become high reward to risk trading candidates on pullbacks. And I've got a couple to look at.
All right, what you got?
One is Xerox, XRX. Just recently reported earnings.
You know, this company, in one sense, this company was a lot like Google.
Yeah.
I don't know if you remember, but back in the 90s, I mean, I never said I was going to go make a copy. I always said I was going to go Xerox something.
Yes.
Like, don't do a search. You Google something, right?
Yeah.
And Xerox was the name. And
yes.
then it struggled for years and years and years. And, I mean, looking at what's going on here now over the past week especially, trying to make a big breakout here.
It could make a big breakout. And, you know, so this is the kind of stock that we're going to wait, you know, to see when it maybe pauses a little bit. Yeah, get a pullback right around that level you're talking about, you know, with a tight stop in case the selling picks up. But I really like the reward to risk, but I'm going to wait, you know, for it to pull. Can't chase it at this point.
No, and especially, I mean, you know, just a quick annotation of the price support resistance line right here. I mean, you can see the top that we had back in November, and we're right up against it. So you definitely, I mean, I don't like to chase, period. But if I was going to be chasing, I would be chasing on the north side of this line rather than on the south side.
Absolutely.
I want to make sure I get through that resistance before I'd even think of it. But I agree. It's just gone up so much. I think pullback's better.
Now, here's another one, FLWS.
Oh, yeah.
And coming just ahead of, you know, FLWS here. 800 Flowers coming just ahead of Valentine's Day. Just look at that powerhouse move, you know, on the massive volume, the big gap there.
Yep.
And here's another one. You're going to be very patient, wait for it to pull back, but you know, we get a nice little decent pullback. And this is one that, you know, definitely is on the radar screen. It's going to probably take a while, you know, for it to set up. But you get a nice little pullback here, and you know, maybe take a shot at this thing once things cool down a little bit.
Yeah, I want to mention also on FLWS, I wrote about this stock on Saturday in the Chart Watchers, just combining earnings and seasonality. Take a look at the last 20 years. This is the seasonality chart for 1-800 Flowers. February's been more 50-50, but it does have average returns of 1.5%. But look at March and April coming up. Almost 13% on average. 1-800 Flowers goes up during the months of March and April. And you've got this backdrop of having just reported great earnings. They raised their guidance too, by the way. So, yeah, I mean, I like the combination. I like having a stock that looks good both technically and fundamentally with the strong earnings, but then also heading into a seasonal period where they typically have some tailwinds. So, yeah, 1-800 Flowers, I think, looks pretty good.
Now, let's flip for a minute because, you know, even the market's really been strong here, Tom. At some point, it's going to get overbought. And I think when that happens, you know, it could be soon, who knows, could take a while. But you have to at least keep an open mind that there could be some stocks that reported earnings, missed badly, did the opposite of the strong ones, and could become short candidates. So at least keeping an open mind. And one of them that comes to mind right away is Juniper, you know, which is JNPR. And here's an example, by the way. You know, a lot of people, those two stocks that I just showed you, you know, people are sitting there saying, well, you know, I wish I was involved in that stock when they reported earnings with that nice bump. And then I'll refer to a stock like Juniper. How would you like to have been holding this stock when they reported earnings? So it's definitely a crapshoot because you never know, you know, what's going to happen. But this is a stock, you know, that just got creamed. Look at that volume bar. You don't see anything like it, right? Yeah. So I'll be patient with this thing and see if it can, you know, move up more and maybe stall at a key level of price or TS right up in that area. You got to really think about it if it ever makes a move to that, especially on light volume. There's nothing wrong with, you know, having a potential short candidate if the market gets overdone.
Yeah, I would agree. I mean, the one bullish thing about this candle here, even though it is heavy volume, had a huge gap down, is it is a hollow candle, meaning that it opened down here at 25 and by the end of the day closed up near 26. So there was at least some buying coming in, but I agree. I mean, I remember the report. They missed on both their top and bottom lines, and you can see the reaction initially from $28 down to 25. Not very good. So the stock hit pretty hard, And if the market rolls over, I think this is the kind of stock that could really help you make some money on the short side. But if the market keeps going higher, I don't know, at some point, because I've been trying to short. I've tried to short 3 times
Yep.
in the market, not individual stocks. I was just doing the ETFs,
Mm-hmm.
but I have been 0 for 3. All 3 times they went against me and ended up getting stopped out. So I can understand frustration. I can understand why there's folks out there thinking the market's going to go down. I mean, history tells us that usually in these bear markets, after we have an initial decline in a rally, we do go back down. But this market, you got to at least give it the benefit of the doubt until we get a reversal, some sort of reversal.
Yep.
Because it doesn't seem like it wants to stop.
Not at all. All right, last one on the another potential short on a decent bounce would be Amgen, which is AMGN.
Mm-hmm.
And you can see Amgen like really struggling.
Mm-hmm.
The only thing I would say, when you get involved in bio stocks or pharmaceutical type stocks, the one thing you're always doing, if you're either long or short, is risking some big, discovery
Mm-hmm.
out of nowhere.
Yep.
Okay. And so, that's a risk you take. And so I typically sort of steer away from stocks like this unless, it's maybe an intraday type thing.
Yeah, Amgen, I mean, the one thing I'd say about Amgen is it's a really large biotech. So they've got a lot of different products. So one announcement isn't going to impact Amgen the way it is a lot of these smaller biotechs for sure.
Yeah.
But yeah, I mean, you've always got the potential, just when you're shorting and, things look like, where it can't go anywhere but down, then Amgen comes out with some kind of announcement that one of their products, all of a sudden the FDA has cleared it. And, the stock's up $4 or $5 and there goes your short position getting stopped out. So I agree. It is frustrating, especially with these biotechs, because it's not just their earnings. They also have big drivers with their, the different drugs that they're trying to get through the FDA,
Mm-hmm.
and how well they're received by the market as well.
Exactly. And then the last stock, this will be kind of, maybe we can talk about this one a little bit because they're reporting tonight is Alphabet, GOOGL.
Yeah.
You sit there and you look at the chart, okay, and you say, it looks pretty good. And gun to the head, somebody might say, I'm going long on this into the earnings reports. But there's really no telling exactly how the market's going to respond. So this is another one where I'm going to wait, let them report, see if they gap up, gap down, and then go from there.
Yeah, I think with Google, and I was looking at this one, and by the way, I looked earlier. I'll just share this with everybody. Google, if they have a good report, could become the highest market cap company. They're not far right now from Apple and Microsoft and Amazon. But I've got those numbers sitting here before we look at the chart, and I can tell you. Okay, so now this was as of probably an hour and a half ago when I looked. But Microsoft was at $810 billion. Amazon, $809 billion. Apple's $807 billion. And then Google is at $787. So Google would need to go up about 3% tonight after earnings.
You easily could do that if it's good.
Oh, yeah. If it's good, I mean, you could see 100 points on Google, but you also could see 100 points down. The thing is, I think in this market, it almost seems like companies, even when they come up with disappointing numbers, they still go up. I mean, Apple warned about their next quarter, and the stock is they're catching back up to all the other companies that they had fallen behind.
I agree.
Take over that market cap leadership.
Well, maybe to be honest with you, Tom, maybe that's a signal, at some point you're going to be right, that maybe it's, we're going to get a little bit toppy here. And I don't know. I think if Google's weak, even if they got an okay reception to weakness, they're really the last of the big, large market cap tech stocks, to report their numbers. There's still plenty of companies reporting this week, but so much attention's paid to the FANG stocks that they can't be overlooked. So I think Google's pretty important. Even though there's lots of earnings still to come, to me, that's sort of the end of the big, FANG tech stocks. They're out of the way. And if they come up weak, maybe at that point, we'll get a little bit of selling, but it's hard to predict in this market.
Yeah, Google, I just annotated quickly. I mean, I think the prior lows that we saw back in September when we broke down, that created a resistance level now at around 1160. And then you can see each time we tried to rally, this 1140 area has been kind of hard. So I would just say overhead resistance 1140 to 1160. If Google has a decent report and can gap up above that area, I think that would be very bullish. If they come up weak, I mean, I know you might say, well, there's no chance it goes down to 1,000, but I mean, if they warn, yeah, they could go down to 1,000. I wouldn't be surprised. I wouldn't be shocked, I should say. Might probably be a little surprised. But if we take a look at the longer term chart on Google, and I'm going to go back, I don't know, maybe about 5 years or so, I think you're going to see this 1,000 level. You can see that the lows, remember when the market sold off back in early February, Google went down to 1,000. When we came back down at the end of March, early April, Google went down to 1,000. If you look back at the end of 2017, Google went down to 1,000. Late April, down to 1,000. November and December, right down to 1,000, although we went just a little bit below. I think it was 980 that I had just annotated as support. But you can see that Google has rebounded off of that and is now back up above its 20-week moving average. So from a bearish perspective, I want to see it back below that 20-week moving average. From a bullish perspective, I want to see it clear 1160. We'll see what happens with earnings. I mean, like you said, it's a coin toss. I'm not sure which way it goes, but the market seems to be wanting to go higher. So if they come out with any good news, I think they break that 1160 level.
I gotta agree. All right, my friend.
All right. Well, I appreciate it. You stopping by. We'll bring up a summary slide real quick on the stocks that we just covered. Always a pleasure to have you on here.
Okay.
Yeah, look forward to having you back in a couple weeks.
Thanks so much. Take care.
All right. Appreciate it. There he goes, Mr. Hopkins. Oh, wow. Look at the market just continuing. I just took a quick look. I know you'll give an update here in a few minutes, Erin, but NASDAQ just rolling along. NASDAQ's up almost 1% today. NASDAQ 100 up 0.95%.
Yeah. Looks like they're catching up here.
Yep. Yeah, they were lagging for a while. And that was one thing that bothered me about the market is the NASDAQ 100 was underperforming, but starting to make up some ground here over the last few days.
Yep. Waking up. Russell 2000's up almost 0.75% too. So.
Yep.
All right. Well, we do have some symbols requested for our 10 and 10. So let's just go to it. Since we're running just a few minutes late, let's, yeah, we'll just go right on into it. Sail is your first symbol.
All right. Sail. Well, it is sailing away right now. Let's take a look at the chart. You can see very, very strong move, really nice volume coming in to support this move. Clearing these prior highs, these prior reaction highs. Only thing is it's just overbought. I mean, I'm not going to chase it. So if I was looking to enter a stock like this, I just can't chase it because if you buy it at 30 and it just has a normal pullback to its rising 20-day moving average, you're down 10%. And then if it goes intraday below the 20-day, you're going to be panicking. At least I would. If I was down more than 10%, I'm breaking down below the 20-day, I'd probably be selling. If the stock reverses, then all of a sudden I'm out at the wrong time. So I would like to see a pullback. And I think as far as annotations, I would not buy the stock here, but I would. I do like the chart. And I think if you get a pullback and maybe head back down closer to this 20-day moving average, I think then you can manage your risk. The problem with chasing after going up like this is you just can't manage your risk. It's a great looking chart, may continue to go higher, but if you get it at 30, where are you going to put your stop? If you're going to put it all the way down here, that means you're willing to give up 10% or more to the downside. That means you got to get at least 20% to the upside because I got to have at least 2-to-1 reward to risk, meaning that you got to believe the stock's going to 36 before it breaks down below 27. I think I'd like to see the pullback first. So I like SAIL, but I think it's just a little too overbought for me. I'd wait for that for a little brief period of selling.
All right. Sounds good. Let's see. Our most popular in the chat room right now is WTI. Interesting.
All right. W&T offshore. Not really participating with the move in energy. So let's pull up the relative chart here and take a look at what's going on. First of all, you can see that its peer group has been weak. And even here, the peer group, though, over the last week or two, starting to turn back up. And this stock continues to move down. So what you can see is the stock is rolling over on a relative basis. It's been in a downtrend relative to its peers for the last 4 months, and doesn't look like it's getting any better just yet. So I don't like the movement here over the last 4 months from left to right going lower across the screen. So I personally would avoid this one. I think there are much better plays out there. When I would begin to like it, number one, I want to see some relative strength. But from a price perspective, I want to see it clear. See this gap down right here with big volume December 10th. And notice when we came all the way back up here, look where we failed. So if we could put in a higher low here and then move back up and take out that level around 570, 575, then I think the technicals would begin to look a lot better. And you might get more technical buyers coming in to support the stock. Until then, I would be looking elsewhere within energy.
All right. Let's see. Next one up for you. Afria, APHA.
Okay, not sure. It doesn't have all the data for the industry. But APHA, let me just go ahead and put it on a regular chart then. Another one that's just been, I mean, the stock was $7.75 on Thursday, and now it is almost $11. So again, I'm not going to chase. I love what's going on here. I think the downtrend's been broken. This is one I would keep on a watch list. Again, at StockCharts, it's so easy. Just keep a chart list, call it setups, call it whatever you want, and then just simply annotate. And for me, there are a couple areas. I think once we cleared gap resistance, which was right here, look at all this heavy volume selling from the $8 level. As we went through $8, what I talk about is I want to see volume confirm that move. Look at the volume picking up as we went through 8. That tells me that there's accumulation. I like the stock, but I'd have to get it on a pullback. And I think it's possible we could get this stock back down into the 8s to maybe even down to $8, but maybe test that rising 20-day moving average. That's what I would look for.
All righty. Let's see. Next one up for you. Everybody's still interested in those metals. How about SLV, silver?
Yeah, I think silver and gold both look good. And I think on the pullback, I'd be okay buying them. I just make sure you keep your stop in play. One thing that I had not realized until just now was that we have negative divergence in the SLV, though. So that might suggest maybe we get a little bit further down. But there is your higher high in price. There is your lower PPO. And what really tops this off is a reversing candle right at the top. That black candle, that bothers me. So you've got a negative divergence and a reversing candle, while price support resides at 1480 or so. We're just about there. I think this is one that potentially could go down somewhere into this gap support zone. 1435 to 1460, somewhere down in here. I wouldn't be surprised, and that you'll get more more support as the 50-day moving average comes up from underneath as well. When I get these negative divergences, a lot of times what I look for is a 50-day test. And if we were to go back down and fill this gap, say 1435, I think as price comes down and the 50 comes up, that could be an area where we're also bringing the PPO back down to 0 and price action back down to the 50-day moving average. So I like SLV. I just think the negative divergence might create a little bit more congestion and consolidation for a while.
All right, let's see. What do you think about the pharmaceuticals industry, Bristol Myers in particular, BMY?
Yeah, I wrote about the pharmas in my blog this morning. I'm actually somewhat bullish the entire group because they were so strong in the second half of 2018. They kind of took a backseat while the overall market has rebounded, but I think you're going to see money rotate back in. The problem I have with Bristol Myers is it's not one of the better stocks in the space. So I think you can find some much better stocks. Here is your pharmas. First of all, pharma set a new high in December, maybe right at the end of November. And look at what BMY had been doing during this period while it was setting a new high. BMY had dropped, I don't know, probably close to 17%, 18%, something like that over that same period. And so look at the relative strength, BMY versus the pharmas, not good. Versus the S&P, not good. But the pharmas, and this is what I was talking about, here's your relative strength throughout the second half of 2018. January, while we've been rallying in the rest of the market, pharmas have taken a back seat. I think they're going to move back up again, though. I just wouldn't take my chance with Bristol Myers. I think on Bristol Myers, I'll just put the resistance level in here that I would watch until we get through gap resistance at $52. That's where we gap down on heavy volume. This may turn out to be an exhaustion gap, but I think that is confirmed on a heavy volume breakout above 52.
All right, let's see. Next one up. Would you race to go out and buy Ferrari? RACE.
I think that chart was looking pretty good last time I looked at it. They just reported earnings. I think that was their earnings candle. Yeah, I think the downtrend has ended. This is one, John Hopkins was just talking about earnings gaps. I love trading earnings gaps. If I can get a stock at major gap support on a pullback, that's when I would be most interested. So here we gap up on earnings to about 116, and then we go all the way up to 126. Now, again, you might think, well, what's the chances we're going back to 116? Well, we had support at 116 here. We were all the way up at 135, and we went down to support at 116 in one day. So it's certainly possible, although I think that might have been earnings related. But now that we've broken above 116, you can see going back here, this has been a pretty key pivot area on the chart. So a number of inflection points. I think if we pull back and get anywhere close to that 116 level, I'd be a buyer of Ferrari.
All right. We talked about this one, oh gosh, months ago. Voya.
Oh, wow. Yeah, life insurance company, right?
Blast from the past.
Yeah. And I really liked the stock for a while. And then, of course, financials all were getting hit. Life insurance took a tumble, and so did this stock. The reaction high, you can see all the support back here, 47-ish. Let me just draw the line. But right there from those prior lows, I would say there, and then maybe even the tail down here. So 45.5 to about 46.75 seemed to be pretty good support. That was a failure here back in November after we had broken down on heavy volume, went back up, failed there multiple occasions, and now we're trying to get through. I'd like to see some more volume. I'm a little nervous because we are just slightly above resistance, but we're not getting the kind of volume that I'd like to see to really support this breakout. So I'd be maybe a little early. I don't think I would. I wouldn't want to be early in terms of jumping here on board. So let's wait and see. But I think a pullback close to that 20-day moving average is a much better reward to risk entry. Or if the stock pushes higher and you see the volume start to expand, then perhaps after some consolidation, a breakout wouldn't be bad either. But that's the area that I would watch. I think Voya is at a critical level right now where we could see a potential reversal.
All right, let's see. We haven't done this one in a while. Let's see. XPO Logistics. XPO.
Yeah, this was a company that back here, I forget, the CEO was working with another company, and there was a big hedge firm that came out and said that this guy was a crook at the last firm. He's a crook at this firm. And that's what triggered this panic selling in XPO. The company came back and basically said, I have no idea what you're talking about. We're fine. And the stock rebounded back up. Now it looks like it may be starting to roll back over. Look at the PPO up near the center line. I would say this, if you're going to try it on the short side, I'd have a tight leash. A break and close above the 50-day moving average would probably get me out of that short, especially if the volume were picking up. That's where the selling began there. And then, of course, the big volume gap down came at about 60. I remember actually as XPO was coming back up here in early December or early January, thinking that maybe 60 was the area the stock was going to turn, but it ended up going a little bit higher. If it starts to roll over, you could see another leg down, no doubt about it. But I think this 60 to 65 area would be accumulation for me on the short side. I would prefer this short versus long until it gets back up through $65. So I would be okay shorting it. Just if I did it at 60, I'd want to keep some powder dry so that I could short it again if it got closer to 65.
All right. Software, Cloudera, CLDR.
Yeah, I was looking at software. Software is making it was making a big breakout earlier today. And Cloudera, after moving lower for quite some time, has a nice uptrend in play. Like so many stocks in January, breaking back up above the 20-day. And then we get any kind of selling. We hold above the 20. We just keep moving higher. So I'm okay on the long side with the stock as long as it continues to hold that rising 20-day moving average. And I probably would sound like a broken record, but I think that's the way I'm going to feel about just about every area of the market. If it's trading above the 20, I don't want to necessarily cut short this rally unless the market begins to roll over. I don't want to try to keep predicting and imposing my will on the market and saying that the market has to go lower. The market can do anything it wants. So let's respect the key levels. But Cloudera, I think that rising 20-day should offer up some good support.
All right. And the last one for you is going to be Omega Healthcare, which is a specialty REIT, actually, OHI.
Yeah, the breakout came at about 37.5 to 37.75. This is a stock I think that's performing really well. I think it's bullish. The pullback on Friday, we saw a lot of the REITs struggling on Friday. The stock's already rebounding a little, but I think maybe it's set a short-term top there above 40. I would expect maybe some consolidation and a pullback getting close to that 37.5, 38 level, I think would present a pretty nice reward to risk entry on the long side.
All right. And that does complete the 10 and 10. Here are the symbols that we just went over. I will get these up in the Market Watchers Live chart list. To find that and those charts with all those annotations, just go to the blogs articles tab, click on the Market Watchers Live blog, and the link to all of these charts will be right there at the top. In addition, they're always in the Market Watchers Live recaps. All right, time for our final market update. Let's see what has been going on. And actually, it's looking pretty good out there, as we were talking about. All of the large cap indexes that I'm looking at are all up right now, currently on the day. We can see a double bottom has formed here on the Dow Jones, and with trading moving into the positive territory, that actually executed that little double bottom, and it suggests that we'll get a move up to the highs we saw on Friday. Right now, S&P 500 is getting up there to test those highs that it had on Friday, but seems to be pausing just a little bit on its move to the upside. Same with the NASDAQ, starting to trade sideways after a really successful morning. NASDAQ, though, is still up. It's almost up 1%, currently up 0.91%. Mid caps are also faring well, although, excuse me, pulling back just slightly right now. Russell 2000, as I had mentioned earlier, is participating in this rally nicely. We are starting to consolidate sideways, just like we are in most of these major indexes. But Russell 2000, it's currently up almost 0.75%. TSX is up currently on the day, up a little over 0.5%. Treasury yields are on the rise, currently reading at 2.725%. The VIX, as we were talking about earlier, is now below 16 on its reading, currently reading 1593. UUP, big gap up, consolidating sideways. Gold, big gap down. Started to make a little bit of a rise, though, and is consolidating sideways again as it tries to make its way back up into positive territory. USO oil, big gap down, seems to have made an intraday low and heading back up, hopefully to close that gap that we got earlier on the open. But USO is currently down over 1.5%. TLT, we have the gap down, continued lower, probably has set that intraday low. It's pretty much even with what we saw on Wednesday, and now we probably will be looking at a closure of that gap, although I don't know that you would find that happening today. That's all I have for the final market update. Tom, I'm going to pass it back to you as I get ready for sentiment.
All right, sounds good. I wanted to point out, I mentioned software having a good day. Software and computer hardware are the two that are really leading technology. You can see software today up more than 2% after moving straight up. We consolidated sideways here in a little bit of a flag, and now we're breaking out and executing that to the upside, which is bullish. Notice also that we don't have very far to go to take out that December high in the software group. So this is an area that continues to lead and has certainly been leading off of that December bottom. So software, I think, looks good. One stock within software that I saw earlier, Atlassian TEAM, is making a breakout here. You can see the volume strong last 2 days. Friday, it actually had a false breakout. A lot of times that will signal a short-term move to the downside, but that's been ignored, and we have TEAM potentially breaking out today above that 100 level, which would be very bullish. But anyhow, nice action taking place in software, and I will let you take over. Let's see what sentiment telling us now.
All right, let's do this. All right, so here is our sentiment update, the Decision Point sentiment update for February 4th, 2019. We are going to go over quite a few sentiment charts. We'll start off with the 10-day moving average of the put-call ratio, followed by the American Association of Individual Investors, the AAII poll. We'll look at the National Association of Active Investment Managers, NAME is what we call it. We'll look at how exposed those investment managers are to the market currently. Right X ratio, money where the mouth is. Instead of just a poll, we'll be looking at where the money flow is going as far as bear, bull funds, and money market or cash. Wall Street Sentiment Survey, this is the market timers survey that we take on Friday afternoons after the market is closed. Right now, the poll is open for you if you're watching live to put your input in on what you think the market will do at the end of the week. Then we will look at the VIX, which I consider a very short-term sentiment measure. And then we will also look at gold sentiment. So lots to look at and lots to cover. So let's go ahead, and I want to get started right back on that. So let's see here. Alrighty. All right, here we go. And we will look right there. Does everything look good on the screen? I hope so.
Yep, looks
all
good.
Right. Awesome. Okay, so we are starting with the 10-day moving average of the put-call ratio, and we look at it for CBOE and equity. I do include the OAX, but a lot of times it travels differently because it is used as a hedging tool a lot of time. So you might see opposite readings on the OEX put-call ratio. For example, you can see these deep low readings that we got on the CBOE and equity put-call ratios, yet we were near a top on the OEX. So they do tend to travel differently. Right now, what I notice with these ratios is we are topping really much lower than we have topped previously. Tops are, in general, a bad thing because that implies a more bullish it makes you think of the more bullish activity. The investors are more feeling more bullish based on these put-call ratios. So I invert the scale. So the lower the number goes, of course, the call being in the denominator, that means the larger that gets, the smaller the reading gets. And so I look at that as an overbought reading when people are getting very bullish. So we didn't get all the way up here to, really those higher extreme levels of bullishness, but we've made a top pretty much where we've seen previous tops going in to the end, from the end of December 18, 2018 to the beginning here of 2019. So we're seeing, readings kind of paused a little bit, have moved sideways, but we are starting to top at a place where we've seen tops before. And that, in my opinion, is going to be bearish for the market. Let's look at the AAII sentiment poll. And this is just a poll, finger in the wind. You go to their website and you can just click, I'm bullish, bearish, or neutral. What I found interesting about the readings for the AAII poll is notice that we have really an exact number of bulls to bears. So our ratio, the bull-bear ratio, is at 1. That's about as obviously as neutral as you can get. What I do want to point out, though, is that when you count this up, we're looking at, a 63% voted either bull or bear, but that still leaves 37% out there that don't know what they think is going on. And so to me, uncertainty, while it is a neutral position, I kind of look at it as leaning a little bit bearish when people are very uncertain. So I would have to say, even though we're getting this reading that is 1, where we have equal number of bulls and bears, I would say the fact that we have so many neutral participants out there in this poll, and that really tells me there's some confusion. I look at that as a little bit more on the bearish side when I consider these readings in this chart. All right, name exposure. What are those active investment managers doing? All right, looks like a double reading here, but it's the same reading. It's just carried over because it's a weekly reading, but currently it is at 76.33 for the name exposure index. This, I've got it marked here with a horizontal line, so you can make a comparison to how many readings are below that versus how many readings are above what we're currently seeing. Really, this is a pretty neutral reading. We're not seeing much change in the in the exposure. We're not seeing that much exposure coming in off of this rally. I mean, granted, we got that move to the upside here, and we had started to see an increase in exposure, but now we're starting to flatten out a little bit. So that is a concern to me as far as the exposure. We're having this nice move, yet the exposure isn't moving quite as quickly in what I'm seeing here. So neutral readings right now on the exposure index. And the fact we haven't done much with that, I kind of look at this as leaning a little bit on the bearish side because we didn't get that big increase in exposure off of this move to the upside. All right, Wall Street Sentiment Survey. And this is the market timers. Like I said, the poll is open to you if you are watching live right now. How do you think the market will close by the end of the week? That is the question we were asked on Friday after the close. I am in the bear camp, even in the very short term. So I know I answered lower. What you can see right now is, 40% of the market timers were bullish and 44 were bearish. So we're getting almost an even reading here as well on the bull bear ratio. And so that's, again, very neutral type of reading. We're not getting these really large spikes here on either side climactic reading. So I have to say that this is, mostly neutral chart. But we had more bears here, quite a larger amount of the bears. Market timers, we tend to be pretty, not to give ourselves a big pat on the back, but a lot of times we'll come in and get that, the right call. But of course, certainly everybody isn't right on top of it. But you'll notice on some of these extreme readings to the downside, they have come in right before some declines here and a continuation of declines. So if the market timers are feeling particularly bearish, that generally is not good for the market. I'm leaning bearish on this chart because we have been on this rally and now we're pulling back. We're vulnerable to a pullback right now, and I think market timers are feeling the same way. All right, next up, the Ridex asset analysis chart. And this is money where your mouth is. As I said, it's very easy for an investor or even a money manager to go online and just hit the poll number, yes, no, neutral. So we like to use this chart at decision point because it does show us where the cash flows are going. And so Ridex was a company that used to manage this basket of stocks, like an equal number of bear funds and bull sector funds, and then the money market funds. And they report assets in all of these vehicles every night. So we can tell by just what's going on with the assets in these various funds. And that gives us a pretty good idea of what sentiment is going on right there. So one of the things I've noticed, especially in this particular week, we're seeing that the money markets, that the cash, that hedge, that neutral position, as far as money goes, we're starting to see some money pulling out of that neutral position, so to speak. But where is it going? It's almost equally moving into the bull and the bear funds. So again, we're seeing some indecision here from market participants. But they're not so nervous that they aren't, they're starting to participate again in the market, because we're starting to see that the money market funds, the assets are moving somewhat lower. So as far as money where the mouth goes, I feel like we're looking at a little bit less bearish activity, or less neutral activity, because we are seeing money coming out of cash to some degree, but it's being distributed almost equally between bear and bull funds. So I have to say, when you look at this overall, we're looking at mostly a neutral chart here, because we're not leaning one way or the other, except for the fact moving out of neutral and losing some cash positions. All right, let us look at the VIX, and then we will cover the gold sentiment. So as I said, the VIX, I think most of us all know, I mean, it is a measure of sentiment to some degree. Sentiment is contrarian. So depending on how you're looking at it in the longer term or in the shorter term, that's going to give you your clues as to which way you think the market is going to go, based on the VIX and the sentiment. And one of the things that I've been watching, Carl's been watching closely, is the fact that we are getting these very low readings on the VIX. And Tom, you mentioned it earlier, when we start seeing readings below 16, that generally doesn't occur in a bear market situation. So that's something to consider on the more intermediate to long-term side when you're looking at this VIX. But right now, looking at the VIX in the very short term, we're getting a puncture of that upper Bollinger Band. And again, I invert my VIX because lower readings are considered overbought to me. People are very bullish. Sentiment is contrarian. So I look at readings of the VIX that are very low as being overbought. And now we're sitting on that area. In fact, we're starting to penetrate that upper Bollinger Band. And so to me, that points to a pullback, that we should start expecting a look in the short term, in the very short term. That's why I went into this week lower. A lot of it was based on where the VIX is right now. All right, and then we'll finish here with the Spider Gold shares, so that we can look at the sentiment for gold. And we track the premium discount for the Sprott Physical Gold Trust, and based on those, it gives you an idea of whether gold is, if we're seeing sentiment on the bearish side because we have high discounts, or are we seeing things very bullish as far as sentiment where you get premiums. And currently, we pulled way back on the bearish readings, and the more, again, sentiment contrarian, the higher the bear readings, the more bullish you would think of it as for gold. And look at this, it really did. When we got these very bearish sentiment readings, we ended up getting a pretty nice rally off of it. And then you can see back here, we had these very high bearish readings, and that came in before the rally. Right now, though, our bearish readings are, I would say, on the low side, in comparison to what we saw earlier. But we are, above average for those discounts. So I would look at this as having that bearish flavor as far as the sentiment goes, which makes me feel a little bit more bullish on gold. I mean, I know we've gotten the pullback. I continue to be a bull with metals and gold. I am holding some, so just full disclosure. So I'm holding on to that. We've got a really interesting support level here with gold. So I think we're going to hold that. We're getting the pullback, after a pretty straight up rally. Not a surprise to see that. PMO looking good too. All right, so let's go ahead. I'm going to, there we go. Do a recap here of what we looked at, and then we can pull up that poll. So as far as the put-call ratio, we're getting those topping readings. I read that as bearish for the market. AAII, we have a lot of confusion out there. I consider that more leaning kind of bearish, but the ratio of bulls to bears is exactly 1. So really, I have to look at this as neutral, but a little bit bearish based on the fact that we do have such confusion. Name are neutral readings. They're somewhat elevated, but I would look at it as neutral for the market. They didn't expand much in the way of their exposure, but they didn't pull back exposure really either. So looking at that as neutral. Timing, the market timers are leaning bearish, and I think that is somewhat bearish for the market, especially given we just had that big move, that rally last week to the upside. RIDEX ratio, investors are leaving cash. They're increasing participation in bull and bear funds. So I consider that somewhat bullish because we are seeing more participation in the market. Breadth and VIX, I think, is flat. We're not looking at it. It's not too extreme, but we are puncturing the upper Bollinger Band, and so I think that's important to consider. Discounts are still very high. I think that's bullish for gold, but we did see on that chart that we don't have as high a discounts as we saw before, but I think they are still elevated enough that I'm bullish on gold. So that pretty much completes the sentiment update. Let's go ahead and take a peek at that poll and see where we are at as far as the rest of everybody, and then I'll get your take on the market as well, Tom.
All right. Well, there you go. 45% agree with you. I think we go lower, 37% higher, and 18% unchanged.
I have to say, yeah, I did. Like I said, I went in lower. So, but I went in lower for last week and definitely was off for that. So.
Yeah, I'm not playing it. I mean, I'm not shorting, but I would have to probably go with lower as well. I just think the market's a little stretched here, overbought. Even if I, put on my rose-colored bullish glasses, we've had such a strong run that even a little sideways consolidation, a little selling, maybe back close to the 20-day, would relieve some of the overbought conditions. So I'm going to go with lower as well.
All right. Well, we'll see how it goes. Yep, higher for the audience. There's still more than a third out there that are looking for higher prices this week. So I find that interesting as well.
Yeah, well, I mean, sometimes you just don't argue with the tape. I mean, as long as the market keeps rallying. And I've tried to argue. I mean, when I, back on December 26th, I think it was when we bottomed, I'd written an article and I said, I thought that was because the volatility index had just shot through the ceiling. I thought we were probably at or very close to a major bottom. I didn't think, there was just no way of knowing that we were going to have 6 or 7 solid weeks like we've had since then. But we did get back through some key areas. So I'll pull up a chart here and just show you in a second on the S&P 500. Yeah, here it is. This is a weekly chart. So, when we broke down, and I think either in that article on December 26th or maybe right after it, I talked about the key areas that I would be looking for maybe another move to the downside, once we got a nice rally to relieve some of the oversold conditions. But, the early February low was 25.31 or 25.32. The closes, if we went to a daily chart, we never had a close below 25.81. We had one in February. We had another one in late March, or I think it might have been the first trading day in April. But when we finally broke below that, you could see look at the volume come in, a lot of selling. So on the way back up, I was looking at 3 levels. I was looking at 25.31, 25.81, and then the 20-week moving average. And we were hesitating. And then last week we broke above that. So now we've got this overhead resistance at 2,800. I don't know. I don't know where it ends.
Yeah. I'm, like I said, I'm still on the bearish side. Even longer term, I still think we have some more, to work out. But, it is a nice rally. It's breaking that declining tops trend line. You can't argue with that either. But that longer term EMAs or moving average is a problem for me.
Yep. Well, we don't have any answers, but I will say Google reports after the bell today, so we might find out some more clues. I do want to thank everybody for being with us today. Please remember to complete the survey as you exit. It's located below your video player. Love to get your feedback here, what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everyone. We'll see you back here tomorrow. Happy trading.